Hey, welcome back. There's a lot to discuss this week. Just a quick few highlights. I'm going to be touching on the slight retracement on the Bitcoin price action. Also, on the regulatory standpoint, the SEC is making an awful lot of clean sweep approvals of a handful of crypto-related ETFs. I'll touch on that. And also, finally, I'd like to share you my personal thoughts on another interesting interview from Thiel, who is the CEO of Mara Holdings. So I'll touch on why that is an important interview, share you some key insights from those. So going straight into the business of the slight retracement on the Bitcoin price, as I mentioned earlier, it was pretty much have already tested and surpassed its all-time new high of $120,000, and now it's coming back down to 117,500, and now we're currently on the $118,000 mark. Now this can only mean one thing, and really the main triggers is around those speculative traders. So there's a heap of liquidations that's happening for both the short and the long investors, where there is that retracement back and forth action that's going on, and we're going to see in this kind of very short-term volatility and price action on Bitcoin. So this is all the more reason why we need to just simply cut off from the noise and don't fall into the trap of panic sell, which is effectively what these type of movements are meant to trigger, right? That's what they're hoping for. That is what TradeFi and the money markets are banking on. Particularly on the whales and the institutional investors that like to use the dips in price in order to get into the market and add to their Bitcoin position. So the message here is, let's cut off from the noise and let's stick to our own convictions and long-term horizon on maintaining the Bitcoin holders that we currently have, and if we can, add to those positions whenever we are seeing some slight dips, because these are only momentary and won't last for long. As we have just seen today, the retracement that's going back up towards the $120,000 mark. So that is the Bitcoin price action front. The next one is to do with the US SEC have received a whole wad of SEC filings around approving crypto-related ETF products. Now there's been one recently approved by Bitwise crypto ETF, so they made a filing on that. That's been approved, but then there is a momentary pause on its approval by the SEC because they want to cover some slight amendments to the original filing. But really the signal there, it couldn't be obvious. It's going to happen, and that is an ultimate bullish sentiment that we're going to be seeing a plethora of new crypto-related ETF products, not on the US capital markets, but it's fair to say other financial markets around the world. So just a question of time when that is going to actually happen and pick up speed. Another one that's been filed, which is interesting, is one from 21 Shares, where they've actually filed and launched a US-based Ondo ETF, which would bring those tokenized treasuries and other real-world assets into the ETF structure via Ethereum-based assets. Now, this represents a significant development in the institutional adoption of real-world asset tokenization, which is one of the fast-growing verticals that we are seeing at the moment in crypto investing. So really, just to summarize those 2 points, we're going to be seeing specialized real-world asset coin project ETFs being launched. So we've got Ondo Finance, which I've just covered, and more broader crypto basket related ETFs being filed and approved by the financial regulators, whether it's the US SEC or other financial regulator in other capital markets. That we're going to be seeing an awful lot more activity in the months and years ahead. And as I said before, this is the ultimate signal that we digital asset investors, crypto investors, we should take it seriously and start banking some of our own fiat wealth into what we believe to be the most important digital asset investments. So for me, it's rather clear. It's Bitcoin as that long-term hedge, and maybe 1 or 2 real-world assets, tokenization, coin projects. So you can treat those as the short to medium type speculative gains, if you like. The bullish sentiment is rather obvious in the months and years ahead. And then this leads to my last topic around the interview that I've seen from Thiel as the CEO of the largest Bitcoin mining company, which is Mara Holdings. He shared some rather interesting insights. And the first one is to do with, ever since the signing of the executive order making Bitcoin a strategic reserve at a federal level, the government in the US is considering budget neutral ways to acquire more Bitcoins into its strategic reserve, a first mover advantage against other sovereigns. Now this is actually an important point, because let's say if the US will be slow in implementing this US Bitcoin strategic reserve, this doesn't mean that other governments couldn't front run that same position, which I wouldn't be at all surprised if we may see some interesting news on other sovereign nation states to do that front running. The next one is around institutional treasury buyers are actively accumulating Bitcoin on their balance sheet. So that is rather obvious. I've covered in many of my videos pretty much brand new announcements every day from Bitcoin treasury companies make announcements of accumulating more Bitcoins in their corporate reserve. So this is going to be a continuing trend that we're going to be seeing certainly for the rest of this year and in medium to long term as well. Also, long-term holders are also rotating some profits into dip buys, which just simply reinforces the support and the conviction that they have in their Bitcoin holdings. Volatility is expected to diminish, which will position Bitcoin as a reserve asset class. Now, what do I mean by that is when we see more investors, more traction, and more different types of investors parking some of its fiat into the asset class in Bitcoin, there's going to be that growing capital base. At the moment, it's $2 trillion asset class, but it's growing quite significantly over time. So whenever there is that widening of the capital base, the volatility as a result will expect to dampen and diminish over time, which makes economic sense. You don't have to be a rocket scientist to understand what I'm talking about here. So the volatility is expected to go down as there is that broadening of capital base in Bitcoin. Right, this brings into my next point around Mara's specific challenge. Not a challenge, he's actually made a revelation what Mara is actually brewing up, because as I said, it is the world's leader Bitcoin mining company. So what they have to share in terms of how it's differentiating itself from the rest of the Bitcoin mining companies really adds weight. He's made a revelation that he is seeing ever more than ever before that niche, that intersection of AI inferencing and Bitcoin mining. And also utility companies are expected to collaborate with Bitcoin miners globally in order to balance the electric grids, which is in itself becoming rapidly an industrial use case that is evolving fast. Now, I've made the same trend analysis in quite a few of my videos, very earlier on videos, ever since I started up my channel, where we're going to be seeing that dichotomy between the Bitcoin miners and the energy companies in order to mine your Bitcoins, albeit at a near cost zero base, which really is the challenge for Bitcoin miners, because there is growing competition between them. So we're seeing more miners coming out, and they're actually in the point where, at least for Mara, because they were one of the first to get into the space, they've actually have amortized their equipment. So really they're in a sunk cost situation where they're trying to find ways to make their business to be seen to be more profitable and more sustainable by becoming more efficient in how they run their Bitcoin mining business. So it's not at all surprised that he himself, Fred, has actually recognized that this is the major focus of attention for his company, to tap into those energy resource supplies at a near cost zero base, and also working more closely with HPC data centers, the AI data centers, and also with the energy companies. So they'll be able to extract the energy that they would need in order to make their Bitcoin mining operations more efficient, both from an economical standpoint, but also from an environmental equipment standpoint. So this makes total sense that this is the trend that he's seeing. Why am I raising this now? Because we depend on Bitcoin miners not only to produce and mine your Bitcoins, but also to safeguard the security of the Bitcoin network. Because again, in many of my videos, I've explained the concept of the network difficulty adjustment, which you can compare it with the central banks manipulating their fund rates. That's how I would make that analogy. Because the stronger the hash rate in the Bitcoin network, the more difficult it is to actually break it, right? And who actually safeguards that? It's the Bitcoin miners. So whenever there's more Bitcoin miners involved in mining your Bitcoins, the hash rate will go up. And there's usually a correlation between the hash rate and the price of Bitcoin. So I would say that we should treat this again as a bullish sentiment, that the Bitcoin network security is going to be strengthened by these Bitcoin mining companies, as well as the validators who actually validate the transactions that gets committed every 10 minutes. So that's all I would like to discuss with you today. An awful lot is going on, and this is all the reason why you should just keep tabs with the videos that I share with you. So the message still remains the same: invest wisely and invest in Bitcoin. Until next time.